Let's get more on where U.S. China relations stand with Leland Miller, CEO of China Beige Book. Leland, great to have you with us. With regards to what's going on with PVH, the investigation of PVH, do you think that this is part of a tit for tat at this point?
Well, it's muscle flexing. The Chinese would do tit for tat if they could, but the reality is that the U.S. and the West, writ large, have much more leverage over China than China has over, the United States, for example. So if U.S. has a larger trade surplus, it has control of the dollar payment mechanism, it has advanced technology that it can ring fence from China. So China doesn't always have the ability to do tit for tat, which is why there's not usually a reaction to everything the United States or Western governments do. But ultimately, they have to flex their muscles every once in a while and say, look, there will be consequences. We do have leverage over you. And one of the biggest points of leverage the Chinese have is sales of Western companies in China. And they can shut that down. And I think every once in a while, they try to teach a lesson to say, look, we are not without leverage. Pain will come to you, too.
Yeah. Can you put this into context with what is going on in terms of stimulus efforts? I mean, we heard about the first sort of tranche of stimulus yesterday or, overnight the day before, and then another tranche today where they're actually going to be paying, part of it is paying poor people actually direct checks, direct money, which is sort of a departure from what they typically do. How vulnerable is China, given what it is doing?
Well, the economy's weak, and it's been getting particularly weak in the last couple of months, and so there was a bit of worry on the ground. But I think what this is an attempt to boost sentiment. I don't think that the leadership in Beijing stays up worrying about the state of the economy as a tier one issue. I think they don't like they don't like that it's not doing very well, but it's not collapsing. It's not doing terribly. It's just not doing very well. So every once in a while, they have to step in during this property deleveraging process, during this tightening of credit that's been going on for years, and show the government's still here. There will be policy support. And so they stepped in on credit. They stepped in property. They stepped in on stocks. They stepped in a little bit with giving money to households, and to show, look, there will be a policy response to weak results. I just wouldn't read into it. This is not a bazooka.
Leland, how about China's approach to their own companies? Part of the discounted Chinese shares, especially the Chinese internet companies, has been a function of China's government beating them down. Any thoughts on whether there's been a policy change, or are there sectors that at least might be more in favor? We certainly see what's going on in the U.S. and attempts to support the tech industry here. How about China?
Well, certainly over the last several years, the focus of credit, and focus of government policy support has been in advanced manufacturing. It's technology. Xi Jinping made it very clear that he wants China to win the fourth industrial revolution, which means dominating the sectors of the future: AI, quantum, biotech, robotics, et cetera. So this is definitely where they're focused on from both an economic and national security standpoint. That doesn't mean they can do it efficiently. It doesn't mean that it's easy to move into these sectors. They're throwing a lot of cash at them. But again, on the Western side, particularly the United States, they are ring fencing the ability to put capital into China. That's inching its way forward. Their export controls have increased. So it's not just so easy to invest in these sectors. If Beijing wants you investing in these sectors, it probably means that a Western government doesn't want you investing in those sectors.
Leland, China, Taiwan, China, Singapore has been a concern for a long time. Is a weakened China more likely or less likely to do something in those two areas?
Well, this is the big debate. I mean, one of the worst case scenarios, I guess, would be a China that is in extraordinarily bad shape and needing to wag the dog and doing something. But look, all this is speculation. It's about making sure that I don't think a collapsing China is good for anybody. But it's about making sure that United States policy in particular is not signaling leaving Asia, leaving the Taiwans to their own devices. That you don't want to give an opening here from the geopolitical side. I think that you want to make sure you keep deterrence at a very high level, so you're not luring Beijing into doing anything it otherwise might not do.
Should there be any concern that one of the weapons in China's arsenal is a Taiwanese company, maybe something like a Taiwan Semi, which holds the cards when it comes to AI chips?
Well, look, if Taiwan Semiconductor goes down, then there's going to be a cataclysmic world recession around it for a lot of reasons, including that it would probably be the start of some sort of form of World War III. These are not moves I think that Beijing knows it can take lightly. This starts a process that unravels the world economy. So yes, it's a vulnerability. It's a vulnerability for Western supply chains. It's a vulnerability for the whole world. And I think that's why there's so much focus on Taiwan right now, because that's really the most dangerous place in the world when you think about where geopolitical tensions could really go out of control.